So, hello everyone. Good morning, good afternoon, or good evening, depending on where you are listening from. And welcome to this session on green microfinance for energy and financial inclusion. So I am glad to share this session with normally 4 panelists. Now I have 3 with me. I hope we'll have the 4th one joining soon. And actually, these panelists represent the diversity of actors which may be involved in this hot topic, green microfinance for energy and financial inclusion. So before introducing each panelist, or actually as an introduction of our panelists, I'd like to start the session by sharing a very simple mapping representing the ecosystem of actors which work to facilitate access to green energy through inclusive finance. So let me share this mapping. Can you see it? Yes, okay. So I hope this mapping will clarify where each of us intervenes actually to contribute to the common goal we share. So indeed, we all aim at facilitating access to affordable and clean energy for people who may face difficulty in accessing it, and directly facilitating access to energy through microfinance may also contribute to the fight against poverty. Since giving access to clean energy may help end clients reduce their energy expenses, may also help improve their health, for instance, and it may also contribute to sustainable job creation and economic development, since supporting demand for these technologies also supports all the SMEs and economic actors involved in the energy value chain. So to reach these goals, technology providers play, of course, a major role. That's why we have Mr. Bhowmick, Country Director of Bangladesh for ATEC with us today. ATEC provides biodigesters, which include the PAYGO system. And then because all technology providers do not always directly provide a financing solution for their clients, sometimes it may be useful for them to create partnerships with financial service providers, which will help develop the financing solution to enable clients to access the technology. So that's why we are supposed to be here with Mr. Islam from Shakti Foundation today. I hope he will join us later. The Shakti Foundation has a microfinance program which is dedicated to facilitate access to energy, actually. And then finally, sometimes it may be also useful for such initiatives or partnerships to be supported by supporting bodies. That's why we are here today with Mr. Olutunmbi, senior consultant from the consulting company MicroEnergy International. We are also with Mr. Wolkov, green finance expert from, I will say it in English, Savings Bank Foundation for International Cooperation, and myself, research project officer at the Luxembourgish NGO ADA, as we are also involved in such initiatives, actually. So after this short introduction, I'd like to invite each panelist to present more in details what they are doing exactly to facilitate access to clean energy through inclusive finance. And please try to do it in not more than 5 minutes each to make sure we have some time to exchange after your presentations. And so now I suggest we start with the technology provider on the table, ATEC. So if it's okay for you, I will start sharing my screen, let you share your screen and introduce what you are doing.
Hello everyone, this is Shuvasish, Bhowmick, Country Director of ATEC Bangladesh. So thank you definitely for today. The topic is basically green microfinance for energy and financial inclusion. So let me start with the Bangladesh, the best kept secret in Asia. So I have very tight time, 5 minutes, so I have to finish it as soon as possible. So the thing is that you all know that Bangladesh, definitely, you might know that the second largest apple exporting country in the world, but do you know that we are also the largest exporter of jute fiber, and we are ranks in the 4th world rice productions. Right now, the annual production is approximately 35 million metric tons. And even though in COVID in 2020, we have export value more than approximately 27.95 billion. So see, so we are renowned for many things, but the things that you might not know also is the country of river and agricultures. And in Bangladesh, almost 4.5 million farmers, they have cattle also. So here comes in our product. So the thing is that ATEC is, we are basically working for the renewable energy, and it's an Austrian social enterprise. We work for the bioregister. So we have operation in Cambodia, and we have just launched in Bangladesh. And as I told you, that we have 4.5 million farmers. There's ample opportunity for the renewable energy for biogas. So let me tell about the current scenario of energy of Bangladesh. And before that, I just want to tell you that we have started our venture in Cambodia in 2016, and we have launched in Bangladesh in 2020. And our goal is to set up 1 million system in 5 countries by next 10 years. So the thing is that, what is our product? So first of all, I like to tell you, so what is the energy condition of Bangladesh right now? In Bangladesh, there are 3 kinds of energy normally used. One is the for clean cooking kind of things. One is the traditional. Traditional is the basically using the firewoods. Also, there are traditional things, the leaves and other things, coals, and there are also the commercial. Commercial, you can use the natural gas or LPG or coal, and there's another one is renewable. So the thing is, then after the liberation war in last 50 years, Bangladesh people have an excess of natural gas of 13% of total population, and rest 12 to 13% for the LPG. So overall 27% people are using the clean cooking, but what about the rest 73%? So rest 73% people are still using the conventional thing, and for that every year more than 100k women dies just before the smoke of this. So here we come the picture. We are basically introducing our biodigesters where you can put the manure, cow manure, and here we can provide the clean cooking service to the women, where the women can save 1.5 days in a month. In a year, they can save 1,000 hour, and definitely they can save a huge amount of money every month, so that they can increase their lifestyle as well. Also, as I told you, and it saves the women life from the respiratory diseases, also improves the soil health. I can give you statistics, very quick statistics. Almost 62% of our land degraded just because of using too much chemical fertilizers. So we have 2 products. One is the biogas, which we can give you the service of clean cooking. Also, we have fertilizer, which can save the land as well. Those who are we are famous for. So with our product, definitely it can give, you see that our biodigester definitely have a lifespan of 25 years. So after definitely in the long run, it will give you savings over the LPG or the any conventional cooking system. So, and now it comes to the picture. So now, as we are providing our product to the market, so what is the affordability of our people? So the affordability, I can give you very interesting statistics. Very few people can afford to buy certain expensive goods in Bangladesh, but most people can't have that access. So here comes in the picture of the microfinancing. So here, Bangladesh is a country of microfinance as well, where we have BRAC, we have ASHA, we have definitely Grameen Bank, such kind of thing. But beside that, we have introduced such kind of pay-as-you-go in Cambodia. So here, in total, we have installed 1,800 systems in the last 4 or 5 years in Bangladesh and Cambodia. But the thing is that the annual interest rate in Cambodia with pay-as-you-go is quite a little bit higher, the 20%. But in Bangladesh, we are basically looking for a partner, microfinance, who can give because it's a land of microfinance as well. So we are trying to partnering with some good microfinance companies like our banks who give us this financing option so that people can afford and have our product. So the thing is that what we are expecting, because we are trying to giving and installing systems all over the Bangladesh, and we are thinking if we can give if we can provide a MFI or kind of installments of $23 or $25 per month, so that people can have the product, just because right now they are spending their money for the conventional cooking. They are buying woods or they are buying LPG and some other stuffs, but for that, they're little money, if they can pay the installment for 12 months or 24 months and have the product and rest 23 years, they can enjoy our product and have the clean cooking access, have the fertilizer as well. So that's all of my presentation with the shortest possible time.
Thank you very much. Actually, we will have the opportunity to talk more about it later during the conversation, of course.
Sure.
And then let the floor to MicroEnergy, the consulting company with us today. So Ilan, I'll leave you the floor.
That'll be Tobi, I think.
Yeah, sorry, Tobi.
No worries. Hello, everyone. Good afternoon from Berlin. My name is Tobi Olutunmbi. I'm a consultant with MicroEnergy International. And I'm also the head of the Competence Center for Methodology and Design. I'm primarily charged with standardizing processes and procedures, also impact assessment, monitoring and evaluation, as well as various capacity building initiatives. Next slide, please. So I would like to talk about two specific projects that sort of demonstrates two different kind of contexts or settings, I would say. The first one here is in Grenada. It's a small highland development state. And it's a very, very specific case study in the sense that it's quite vulnerable to the adverse effects of climate change. So on that, in this context, we are supporting the EcoMicro project, EcoMicro process, alongside several partners, and we're working with the Grenada Development Bank to facilitate climate resilience through mitigation and adaptation finance for MSMEs and low-income households. This particular project has 4 different components that sort of reinforces our approach to projects, where we have the product development, the green finance product development on the one hand. We support the institution on the other hand through sort of improving the environmental footprint, I would say. On the other hand, also we sort of coordinate with the populace there, Grenadians, to sort of communicate the value of the initiative to them. And then on the fourth hand, we make this a bit of we give the opportunity to transfer these learnings to other highlands in the area. So the beneficiaries for this are primarily about 130 beneficiaries for the pilot case, and also the employees of GDB themselves. Next slide, please. So the other context is in Afghanistan, where we're supporting the Afghan Credit Guarantee Foundation, and also the first microfinance bank. It also represents a bit of a peculiar case, as it is in a post-conflict reconstruction phase, so to speak. Here we are supporting the first microfinance bank to deploy a solar lending program, and the pilot is also just starting right now. The aim of this is to sort of reach 20 beneficiaries and also the staff of FMFBA to facilitate some learnings that can be transferred to a scale-up phase of the initiative. So these are the 2 key case studies that demonstrates a bit some of the contextual understanding that goes into our engagement. Thank you.
Thank you very much, Tobi. We'll have some time for the audience to ask questions just after all the presentations. But maybe then we can go with the Saving Bank Foundation. Yeah.
Yes. Hello, everybody. My name is Ilan Wolkov. I'm working with the German Savings Bank in Myanmar. This is an EU-funded project, a 4-year EU-funded project. Basically, it's called the Tabawa Project. It's basically to implement energy efficiency, renewable energy, and wastewater management in the food and beverage sector in Myanmar itself. And if we go to the next slide. you can basically see that there are 4 project components. The first one is a political framework, basically to work with the government to work on legislation for environment, for energy efficiency and wastewater management. The second component, as you can see down in the red, in this red thing, I can't point to it because I don't have the control, but is to strengthen the SMEs, to help them basically to apply sustainable energy and wastewater management practices, basically through increased technical capacity and market development. The third one is our component, as we are the savings bank. This is a project which is working together with WWF, Germany and Myanmar itself, and our component basically works to implement the green finance component, let's say. The last one is basically to try and disseminate the lessons learned from our project in the region in Southeast Asia itself. And the central, let's say, goal of the whole project is to decisively reduce wastewater energy, and also to reduce, of course, the energy consumption per product produced, let's say. So if you look down to the right, you can basically see that there is you have a diagram where you see the banks, suppliers. Down to the right, there's a round circle with a little factory that is called the Tabawa. That's our project. And also up, there's another circle which are basically funds for SMEs itself. The idea basically is that Tabawa, our program, facilitates banks, enable banks to go into green financing. We have signed 4 MOUs with 4 different commercial banks in Myanmar, and we have also signed, as you can see down there, suppliers. Those banks have signed MOUs with those banks that we have signed MOUs with as well. And the idea, of course, is to provide, for example, solar panels, wastewater management, gasifiers, etc., to the SMEs within the food and beverage sector itself. If you look down to the left, you will see 2 people shaking each other's hands. On the right, that is a supplier of wastewater management and the CEO of one of our participating banks. The goal of our project basically, of course, is to help set up products, green finance products, to train the bank staff, to take them to the field. And you can see there some bank staff sitting at one of our on-the-job trainings in some of the SMEs that we visited. You can see there is actually a garment factory, although this is a garment factory, we are concentrated on wastewater management. And down to the right, you can see there is a classroom where you actually have bank staff being trained by the green equipment suppliers in the specific equipment and how it helps and promotes sustainability within the SMEs. And the next slide, please. All right, here are some results. Basically, I'll just quickly go through them. We managed to sign 4 MOUs, as we said, with 4 major banks, some of them larger, some of them smaller. We trained 220 staff of the partner banks, both in green lending and cash flow based lending. Also, we have trained trainers, so we did the trainers of trainers, which have been certified. And also some solar leasing, higher green products came out of our TA with the banks themselves. On the right, you can see the MOU. As we said before, the MOUs, you see a picture of one of the banks signing with the German savings bank, or Sparkassen, as they say in German. About 400 million chat has been approved, and possibly more in the meantime, to green suppliers. So that is financing of the suppliers of the green, for example, solar power or solar power equipment itself. And if you go, if you go further down, you can also see that, for example, one of the examples of our TA and interactions with the banks and the suppliers and the SMEs is, for example, a hotel, which has basically which also has an ice cream factory, which has, for example, received a $60,000 loan to include solar panels for the new hotel. Also, another example is a frozen food factory received an offer for a solar installation from our suppliers, and also one industrial laundry also got several offers for solar panels, for example. Again, about $300,000 million. I'm sorry, that's more like US dollars. It's not a million, but $311,333 of investments were identified. And one of the big activities in 2020 that we went through during the COVID period itself was that we managed to have basically events for about 450 SMEs online to promote energy efficiency and renewable energy. And if you look at the left, you can see the first picture is one of those awareness events that we held. The next picture further down is actually the trainers of trainers, or part of the trainers of trainers, and some of the trainings that we did in the banks. And then you can see the last three pictures is a visit to that hotel that we spoke about, which also has the ice cream. You can see we have both the suppliers with us, the bank with us, and also, of course, the owners of that hotel and the ice cream factory. On the right, you can also see another hotel which we visited, which already had some solar water heating panels. And yeah, that is more or less, I hope that's within the 5 minutes that we determined.
Yes, perfect. Thank you very much. So I will check again if we have our last panelist with us, but I still can't see him. So I would like first to ask the audience if they have some clarification questions about what has been presented. Otherwise I will have some, but first, yes. So again, the audience, you can, if you want, ask questions through the Q&A tool. Yes, so for now, I don't see anything. So maybe among the panelists, maybe some of the panelists here have questions for the others. Is anyone has a question about the experience of the other?
Yeah.
Oh, okay. Please,
no
please.
Problem. This is for Shuvasish, if it's okay. I hope I say it right.
Yeah, sure.
Excellent.
Sure.
I understand that this is the investment for the gasifier is possibly a little bit. It's a big thing for a family in Bangladesh, I would imagine, if they have to come up with the money themselves. Is there a technical possibility that two families can share the same installation if they are relatively, or several more, so that it becomes easier?
Yeah, no, thank you. It's a common question for us always. So always people have to know. So the thing is that we have focused. Our product is basically designed to give the service to for a family of size of 3 to 4 members for individual one. Yes, it's possible. Definitely, it's not impossible. So if we connect connect it and give the connection is possible. But the thing is that there is always a confusion between how much who wants to use what amount of gas who will basically load the system. So that could be a confusion of that. Maybe for community management. So if there is a common body or committee that who take the responsibility to manage that, that's easily possible. But most of the time we focus, and our product has been designed in such a way. People of Bangladesh, as I told you, that we have 4.5 million farmers who have cattle, normally 2 to 5 members. So Bangladesh is a Muslim country, so you know, in the Eid al-Fitr, so we need a huge number of cattle. But the thing is that people sometimes they have 4 or 5 cattle, but after certain occasions there are various reasons, then the cattle number decreases. So in that case, most of the time, the average number of cattle in their house is approximately 2 to 5. So our product is designed in such a way so that they can feed the system with their available cattle and have the gas that is required for those family only. But if we connect it in a grid or connect 2 or 3 multiple system and connect to 2 or 3, is possible. Definitely it's possible.
Okay, thanks.
Okay. Indeed, what we can see is the diversity of projects here. And we see that the various technologies presented do not serve the same size of targets, the same number of people. So we have smaller technologies with ATEC. We have bigger things presented by you, Ilan. Does someone have another question for another panelist, or do you have any clarification question? No, not yet. Okay, so in this case, I have one also for you, Shuvasish, actually. Can you explain? You explained that, so you have your own PEGO system, but then you are also exploring partnerships with banks or financial institutions. Could you explain which advantage you see for each system, let's say, and what are the advantages and the disadvantages of each system?
Yeah, let me clear about the things. The thing is that, as I mentioned, that we have started our venture from Cambodia in 2015. And from the beginning, we have introduced pay-as-you-go in Cambodia. But the thing is that it's all of our system has been sold in Cambodia with the pay-as-you-go. And we have a very interesting system in Cambodia as well. So if anybody wants to take our systems, they can take easily and they can pay through that pay-as-you-go. There is a device there. After each payment, we send them a code. They can put those code in the system, then the system runs. If they can't pay, the system automatically, the gas automatically shut down. So very interesting system. But as we have launched in Bangladesh during COVID, so so that's why we thought with the initial thing in Bangladesh we have a different scenario, because we in Cambodia we sell through B2C. But in Bangladesh, we are basically the enlisted vendor of Eat Coal, and we are basically selling our product through Eat Coal via their 38 organizations. So we are basically selling our product through B2B. So that's another reason. So we are not managing the end user directly. So that's why we have initially, so as there are two reasons. One was the B2B and another was due to the launch during COVID. So we not yet introduce pay-as-you-go, but it doesn't mean that we will not introduce, not going to introduce there. There is still possibility of introducing pay-as-you-go, and we think pay-as-you-go could be a good option. But the thing is that Bangladesh, as I told you, that the country of microfinance as well. So there are plenty of banks and microfinance institutions who are giving us very good services, also offering us very good products as well. Like as I told you, that there are some banks which are offering green financing for, there is a provision for green financing as well. So that the interest rate is low, and also they have the holistic ecosystem to collect those installments and everything. So it is always better to have a partnership with those banks or microfinance financial institutions to give the customer better service. So that's why we are going with those partners.
Okay. Yeah, I see. I understand. So actually, it brings me to my first question to all of you. Basically, especially about these partnerships between technology providers and financial service providers, I would like to have your opinion about the main challenges you may have faced to build these partnerships, and actually to use financial inclusion or microfinance to facilitate access to clean energy. I can start by sharing quickly Ada's experience and Ada two main challenges, I would say. So just to give you some perspective, our projects also consist in building partnerships between microfinance institutions and technology providers. So usually smaller technology providers for individual use or use at the household level. It's to facilitate access to solar equipment, usually. Yeah, and I will keep this example. So for us, the main challenges we face, the first one, I guess, would be to to raise awareness and convince of the interest of these technologies, not necessarily among the management team of the financial service provider, because usually we work with microfinance institutions whose directors are convinced, but more among the internal staff, and the loan officers are supposed to be the ones promoting the technology and convince the end clients of the interest. And we had a lot of problems making sure that the internal staff is convinced to be able to promote the products afterwards. So this was one of the first challenges. The second one maybe is to find the proper model, partnership model between the technology provider and the financial service provider to make sure the roles are properly defined between each other. For instance, everything related to promotion of the technology. Sometimes it was done by the technology provider, sometimes by the FSP, but it's not the same job actually. So it was not easy to find the best model. Same for post-sale service. Who should be the point of contact for the end client? Usually the end clients don't really know who to contact when there is a problem. And so, yeah, it was not always easy to build these partnerships. So this would be our top 2 challenges, I would say. But I would like to hear from you about your experience.
All right,
perhaps
start? If I may, if I may start, these are very, very familiar challenges for us as well. I differentiate a little bit between Afghanistan and Grenada in the sense also. In Afghanistan, the market is a little bit more mature in terms of the available technologies, the suppliers, the installers. In Grenada, on the other hand, it's a little bit not yet at that level, just at this point. So in Grenada, we're looking at a situation where we have to go with a more liberal approach, you know, instead of having specific relationships or agreements or MOUs with between the supplier and the FSP. We're looking at a more liberalized approach. And also given that it's a basket of solutions that we're trying to promote in Grenada, you know, for mitigation and adaptation at the same time, that will be too many MOUs, so to speak, if we have to go through that process. On the other hand, in Afghanistan, anyways, it's just one approach. We're promoting solar lending, and the market is, anyways, a lot more advanced than we have in Grenada. And in this case, there are more established suppliers with a lot more experience, I would say. And they are also ready to, you know, take up the challenge to market, and also to coordinate some of these activities a lot more closely, I would say. So generally, the experience from Afghanistan is quite interesting in this sense. A lot of the suppliers are even more proactive. But on the other hand, I think it all depends on the maturity of the environment or the market that determines a lot of this things.
Yeah. Okay. Thanks. Okay. So,
we can see you want to share.
Yeah. Okay. No, it's okay if sure.
Yeah.
So maybe what I'll try and do is I will maybe just draw on the Myanmar, this recent or this project that is still ongoing, but also I will draw a little bit from actually from my Nigeria experience, just because I've worked a lot in the microfinance sector there, and of course one of the big hot subjects is energy or the lack of it. And so therefore solar is becoming much hotter with time, let's say, or a necessity basically. But with regards to the Myanmar project, what we have there are we're talking about the relationship between banks and the suppliers. We have several different, for example, solar suppliers, which some of them are, let's say, larger, have lots of capital, and also involved in for example, in the World Bank's microgrid or micro electrical grid program, which is quite established in the country, whereby they give grants, and so they have a large capacity. They have a great a high capacity to install larger installations, etc., etc., and also, of course, home installations if they want to. And also some, let's say, some of them are working with large corporates and not, let's say, with SMEs, and that certainly they are not used to going with on the micro level. Let's put it this way. So it, on the other hand, there is another. I'm just giving another example. Another supplier which basically works with smaller systems and are really interested in the SME segment. So I think it's very important also that the solar suppliers, that it depends what kind of business they want to do. Do they want to work with the micro? Do they want to work on the grid, the microgrids, or do they want to work with the corporates, with the large systems, multinationals, etc., etc.? So I think it's important to pair them up so that they fit to each other. And we found out that, for example, for our program, the smaller solar supplier is already doing that segment, and therefore they were interested. They became much more responsive. Let's put it this way. But the point basically is to set up an agreement. We let the bank sign MOUs with the suppliers, and the suppliers then also come in and support the banks with training in their products. At the same time, they provide offers and go with our let's say with our bankers to the SMEs. And this has already given this is our best experience. That was one. Now I would very quickly, because I don't want to take all the time, but just with the Nigeria experience, for example, Lapo and some of the other, they basically they are Lapo. At least when I was there, was the most advanced. They basically have the suppliers of the solar systems with them in the field. They go with the loan officers to market. They train on the job, and this is at the same time. Each branch has a certain amount of solar panels in the branch itself. They've actually bought it from the suppliers, and then of course the suppliers still need to come up and to change out any faulty or that are within the guarantee. Let's say something like that. So those are my principal experiences. Thanks.
Mm-hmm. Mm-hmm. Thank you very much.
From my experience, I can tell you that you should have there for Microfinance. There are three parties. One is the end users, one is the definitely bank, and one is the vendor or the companies. So the thing is that you need a better collaboration with each other. So the lack of collaboration could be one of the major difficulties, also challenges. Also, the thing is that you should have a proper system. As I told you that in the Cambodia, we have a pay-as-you-go, but we have another systems. So if anybody is defaulter, so we have a cut-off gas connection as well. So there is some safety system. So we have built up so that the default rate the defaulter is quite low. So in the Cambodia also we have a very low default rate because we have such backup system to so it's for this kind of microfinance. So the thing is that the customer might not pay the installment, maybe could be, but the thing is that you should have such system so that financial institution can feel comfortable to I think invest or give the financial loans. Also, the thing is that awareness is also an important thing, as you told, that regarding the product knowledge and everything. Is that another important thing is that sometimes what happened after giving them finance, company doesn't give a good after-sale service or something like this. People who is the user might frustrated that they are not getting the proper service and the product proper service of that product, so they are not interested to pay the interest or something. The installments also. So there are a couple of things. One, as I told you earlier, so there should be a complete structural system so that everybody it falls under those systems, have a good ecosystem as well.
Okay, thank you. I would like, so after this, you have already started to share some recommendations to make sure these partnerships work, right? And to make sure we reach the final goal. I would like to share another lesson learned on our side, actually coming back to the end clients. As I shared previously, So we found it sometimes difficult to convince loan officers and the staff, the internal staff of financial service providers of the interest of such technologies, but sometimes it's also the case for the end clients. And what we learned actually is that if we come with just, by just sharing the interest in terms of climate issue or environmental issue, the end clients are not convinced of the interest of such technology. And we should come with more economic arguments, actually, and by showing that there will be a very quick and concrete positive impact for the end clients. And of course, it doesn't prevent us from raising awareness on these environmental and climate issues, but we realized that it was very important to insist on this quick and economic positive impact for end clients. So I would like to have your view about that. And then maybe another thing, what we thought as well is what we saw actually in the field is that it's very important to work with reliable technology providers, which are able to provide a lot of products in the long term and to ensure good after-sale service. And that's why we thought actually that it would be interesting to work with financial service providers, which provides financing solutions for the end clients, but maybe also for the technology providers. And by financing the different actors involved in this value chain, so the end clients and the technology providers, it could help build a more sustainable model. But that's what we think. We have not done it yet. But I would like to know if some of you have seen already this kind of experience, have been involved in this kind of experience, and has something to share about this.
Yeah, actually, that is exactly what has happened in Myanmar in our program, whereby 2 banks have actually extended not large credit lines, but small, some credit financing directly to the suppliers of the equipment itself. So that's supplier finance. It's definitely doable, especially, of course, if we are talking about credit lines or credits that are reasonably priced. If you have a grant, especially, then this, of course, will move more or less, not by itself, but certainly it'll be placed much easier, definitely. So, in other words, subsidized credit lines, grants, etc., both to the end user, but also to the, of course, to the supplier. Yes.
In your case, you work more with banks, right, than microfinance institutions. So I guess these credit lines are of higher amounts than usually with microfinance institutions, right? Yes.
So actually, unfortunately, in this project, we don't have a credit line, but the banks actually reserves some money. They have agreed, each of them, unfortunately, because of the political situation, we're not in Myanmar at the moment, we're not able to, of course, to execute to the end or to the full, but in each MOU, we set down an amount, which was $3 million per bank for green finance. And then, of course, that's something that you need to, so they have, of course, an MOU is not a fully legal document, but they certainly have made a commitment at management level to go in that direction. Yeah. So the way we also tried to make this also viable in terms of market prices, that we basically locked into existing credit lines like the KfW credit line or JICA, which are already quite subsidized as compared to the normal funds from the banks themselves. Yeah.
Okay, interesting.
Yeah, if I may just add a few points here. I think the idea of supporting both the supply side and also the demand side is quite innovative. Somehow this ensures objectives are aligned a little bit, but also we have to look at the conflict of interest and some of these other considerations. I'll be quite delighted to see how this actually works in practice, because this is interesting. Just to circle back a little bit to Mathilde's point earlier on with the beneficiaries. In my experience and in our experience, we find this to be one of the biggest challenges, communicating the value of the solution to the end user, right? It's not just bringing an environmental argument, like you rightly said, it's more of an economic argument. Can the savings from switching offset the investment required? This is always what it comes down to. And I like to differentiate also here between Grenada and Afghanistan, the two prime cases. In Afghanistan, we've conducted a more elaborate feasibility study with some case studies where we actually interviewed them, looked at the demand profile, right? And also conducted some technical sizing right there. Preliminary results from this indicated that a lot of the loans were feasible just because there was considerable energy savings for them to invest in PV panels. But again, the major issue right there, if I circle back to Mathilde's point, is with the loan officers, convincing, and it's essentially a relationship, right? Loan officers and beneficiaries. It's not alone to say, okay, if you invest in this, what you currently pay can offset this investment, right, directly. No, it's important for you to also make them understand that over a long period of time, a considerable amount of time, this offsets this and this is more sustainable. So it has to be essentially a relationship right there with the loan officers and the beneficiaries. On the other hand, in Grenada, if you remember in my presentation on the experiences earlier on, I mentioned that this is a more holistic and multi-year kind of initiative, right? Where we understand demand, we understand supply, and then we propose a solution somewhere in between right there. In Grenada and Afghanistan at the same time, we are, aside understanding all the sites, we're also involved in beneficiary outreach and marketing, where we develop strategies to continually engage the beneficiaries, to continually communicate essentially this value towards the beneficiaries. So these are some of our experiences in this regard.
Yeah, thank you very much.
And from Bangladesh experience, I can always tell you that I always believe on believing in I think developing a sustainable model, win-win situation that could be win-win situation for all the stakeholders. First of all, as I told you that before launching anything, so let me first think about what is our beneficiaries' pain points. So we know that our beneficiaries' pain point is that we know their income level, so how much they can spend. So we should have build up such a sustainable model that is convenient for the end users also, and build such a model for the financial institution as well, so they can't say no, because we should come up with such thing. We know that their limitation as well. So also the expectation from those financial institutions is that how quickly they can disburse those credit lines to the beneficiaries and how easily, conveniently. Because most of the times it took so much time to judge, or they might look for the collaterals and other things. But the thing is that we should know that all the pain point of all the stakeholders. Then based on those pain points, so to build up such a sustainable model that will be win-win situation for all the stakeholders, then implement those sustainable models. That could be I think the winning formula, and that really works, and that is happening in our case as well.
Mm-hmm. Okay. Okay, so I guess there is a question which may be for you in the Q&A tool. There is a question saying, as a technology provider, what are your expectations to financial service providers for successful partnership? So I guess you already answered at least partly to the question, but would you like to add something on that?
Sure. Definitely. The thing is that our expectations, definitely, we also know that your limitations. So when we are proposing you, definitely we should have, as I told you, we should have proposed you a sustainable model that would be win-win for you. But the thing is, the expectation is the disbursement of those credit lines, how conveniently, how quickly, and how systematic way we can provide those things to the end users, so that they can feel hassle and they can know about those products, and they have a good relationship with them. them. So definitely we have to understand those market, and based on that, we have to design those model, how you can do that. So the only expectations is that to understand the market and to expedite the total process. The only thing is that to expedite those things and come up with such a variety of products, not just because it's everyday market needs is changing, and consumers' needs are also changing. So adopt those things and come up with such differentiated models is also important. So I might, as I tell you, that in a different geographic region, you might have to introduce new product from the financial institution. It might not have the generic product that it will work in everywhere. So you have to adopt those changes very quickly and expedite the total process so that customer can feel, I think, comfortable to deal with those financial institutions or the banks.
Right.
Okay. Does someone want to add something to answer this question? But I guess it was more for ATEC. Yeah.
Maybe just from the bank side, it's also important if we're talking about exactly as Tobi said, and you also, Shuvasish, it's important that there's a win-win situation, that it's easy, that there is a strategy from the bank side from our side or from the bank side to do some marketing to get to the clients, and it just has to be easy and quick in a way. If we're talking about microfinance, I think, and also it's important that when you work with the financial institutions, that the management give the signal further down as well, that this is part of our sales target. You will give you incentives to actually sell this product at the same time, and also for the if the technical service provider can be with the loan officers in the field, this will help a lot.
Yeah.
Okay. So we have 5 minutes more. I see another question actually from the audience. What efforts can green finance projects make to ensure revenues to remain in, I don't know what this acronym means, LMIC, where the products are provided? Can you see the question? Does someone want to answer this question? Developing countries, let's say.
Okay.
It helps.
Okay. Yes. Okay, I understand. Maybe I'm not sure. Maybe the question is, if you're buying solar panels, maybe they should be produced locally. Is that the idea, for example? Okay.
Yeah, I guess it's what it means actually. So I guess it's a way to make sure that the revenues remain in these low and middle income countries, to work with local technology providers. I guess it's one way of doing it. Yeah, maybe you can share from your experience. Is it often the case, or?
Perhaps I can share a few insights on this. Primarily, from my perspective, it depends on the maturity of the environment in each country. For example, in Nigeria, we're looking at a lot of efforts to localize the value chain to some considerable extent, where some parts of it, at least the non-complicated parts of the requirements, are produced locally, talking about batteries and some of these components. So primarily, my perspective is it depends on the environment, because these things are high investment kind of efforts, and we can't see this in countries where the sector is still very nascent or the ecosystem is still very nascent. So if the environment supports it, localization is a good option to go. Perhaps starting with some of the smaller components that are easy to manufacture within the countries. But again, also focusing on suppliers that sort of have good networks within the country is another way to approach this. This is a bit the way I see it.
Yeah, I share your view. Actually, sometimes in our experience, we had some difficulties in finding strong technology providers in the field. So sometimes it was more complicated to build these partnerships with a reliable partner in the long term, at least. Does someone who, yeah.
Maybe the good thing is that, for example, if you buy solar panels in Nigeria from India, it still stays within the low and middle countries. However, it might be an idea to think about asking the Indian company for some technology transfer to Nigeria, at least for some of the parts. So,
yeah. Shuvasish, you want to add something?
I think you guys already shared all the points. Yeah.
Okay, so I think we are out of time now, so we have to close the conversation here. But I think it was very interesting conversation, and if you agree, we could continue in other circumstances, maybe. So I hope it was interesting for the audience as well. I thank you very much for participating, sharing your experience as panelists, sharing your questions as participants, and I wish you a good conference if you are still participating in the other sessions, and otherwise has a good rest of your day.